As Americans, friends and family gather around their Thanksgiving tables or devices to communicate with those loved ones they couldn't spend this holiday with, let us take a moment of collective gratitude for the blessings we have in our lives. After all, there are millions of our fellow countrywomen and men who may not have much to put on their tables, nor to be able to share these holiday moments with people in person or even from afar. If you're blessed to have loved ones in your life, give thanks. On a lighter note, and as we have been strongly suggesting on this channel, the price pullback holidays came early this week for silver and gold bulls out there looking to add to investment positions. Now is the time to be active, as price weakness begets lower price bullion buying for long-term wealth preservation and accumulation. This week at SD Bullion, we're cranking out Black Friday bullion deals, and following these limited time offers, there will also be Cyber Monday savings. So stay tuned for the lowest price, high quality bullion product sales coinciding with this recent pullback in silver and gold spot prices. Hello there, this is James Anderson on behalf of SDBullion.com. Before we jump into some of the biggest headlines and data points in precious metals this week, if you like these weekly bullion market updates, be sure to smash the like button so this algorithm will serve this information to other like-minded sound money stackers. To start this week, we'd like to put this gold spot price market dip into its full fiat Federal Reserve note regime context. Here is gold over the last 5 decades, having reached an all-time price high only a few months ago in early August 2020, having since been pulling back and consolidating for the next major move higher. This similar long-term gold price chart was issued this week by Michael Oliver of Momentum Structural Analysis. It's a reminder from a technical commodity trader who has been trading gold futures contracts ever since the COMEX began in gold derivatives in 1976. Gold in its 1970s bull market to its early 1980 valuation blowout fought through its old price high and resistance of right around 200 an ounce. Once it cleared 200 an ounce twice, it never looked back. We could very well make an analogous case that this may indeed be the last shrinking time frame in which we'll be able to buy gold bullion below 2,000 fiat Federal Reserve notes per troy ounce. By the middle of this decade, the gold price could be many multiples higher than where it stands now. On this channel this year, we've shown viewers various long-term gold and silver price targets using past historic U.S. financial precedent versus the ongoing monetary base expansion. The explosion in the fiat Federal Reserve note M0, 1, 2, and 3 piles this year have been exponential in size, and they have quite likely only paused for the time being. This bar chart made the rounds this week on financial Twitter. It shows more than 1 in 5 of all fiat Federal Reserve notes have come into existence in this year, 2020 alone. Now, with a dovish former Federal Reserve chairman now chosen to take over the U.S. Treasury, the currency creation should continue ramping at a rapid pace in the years upcoming. And even with nominal record high levels for many U.S. stock indices, the financial powers that be are already laying the verbal groundwork to buy ETFs and stocks during the next equity market crash. As we in the West continue to further fiat financialize our economy, mostly favoring and enriching the top 0.1% of our U.S. Treasury looting financial oligarchy, our supposed enemies to the East have already hedged their nation's reserves by steadily and transparently stacking cheaper priced gold bullion over the last decade and a half. Now, their sovereign wealth fund and gold mining industry are set to become perhaps the largest players in the precious metals markets this decade unfolding. Americans who want to protect their purchasing power in the coming years are going to be throwing more than a paltry few billion fiat Federal Reserve notes to buy our nation's sovereign silver and gold bullion coins. It's quite likely both the all-time gold coin and silver eagle coin annual nominal fiat sales totals will both get broken before silver and gold have gone exponential in valuation gains. My contention on this channel has long been that before this precious metal bull market has ended, we will witness all four major precious metals find all new nominal price highs in concert, akin to the early 1980 bullion bull market peaks. Price separations from their 200-day moving averages in all four precious metals confirms for me that we have well more to see before this bullion bull market gets manic. To see the gold, silver, platinum, and palladium 200-day moving average spikes throughout this full fiat era. Now imagine what these four charts will look like when they again outrun their 200-day moving averages to the upside as they did in early 1980. Take advantage of these current spot price dips now. For come this time next year, there's no telling how much currency creation will have had to have been added to keep the economic and fiat financial system from fraying and falling apart further. That is all for this week's update. Happy Thanksgiving out there to the US viewers, and for everyone out there, as always, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.